Hey guys, Don Durrett, Gold Stock Data. I'm going to give you guys a Christmas present. I'm going to go over my portfolio. The first one is going to be my producers, then I'll do developers and exploration, depending on how long it takes. Just to do the producers is going to take about an hour, quite a few of them. Um, so before we start, I was going to talk about today. The S&P went down 3%. Um, Silver went under $30. The miners are kind of sluggish. I expected it. I didn't. A lot of people were bullish on on silver, thinking silver was going to break out in the near term, and I haven't been because I don't think we get to $35 silver until the fear trade arrives, and it just hasn't been here. The bullish stock market, the melt up, that's not enough to push silver higher, to push the miners higher, I don't think. And so we've kind of been in this wait mode and waiting for this 15-year bull market to end and uncertainty to begin. The miners have really only done well in the 1970s when you had economic problems throughout the 70s. Then from 1980 to 2000, 20 years, the miners did nothing. Then from 2000 to 2011, basically that decade, 2000 to 2010, the miners did really well because you had economic uncertainty in the first decade. And now we're back in. So you had almost 20 years from 1980 to 2000. And now we've had 14 years of basically stagnation in the miners. And so I think we're getting close. Um, and I'm confident in that, and that's why I'm going to show you my producers and why I'm accumulating, because I think that this run, I mean, if you think about the 70s and the 2000s, the miners did extremely well. And I think they're going to do extremely well again. And right now they're undervalued. You can, and I'm going to show you some names, and you can look at them, the ones I like better than the other ones. I'm probably going to mention some companies that you own. Um, and I'm a big fan of believing that the producers are going to have the best risk reward because they're going to participate. I believe silver gold's going to $4,000. So right now the margins, I'm going to show you some margins. Most of the margins are $700 to $1,000 today, and I think that they're going to go up substantially. I think the margins are going to go up substantially, and the multiples are going to go up substantially. Sentiment is going to improve substantially. Um, so you really need to be a believer that that is the outcome, that gold's going to do extremely well versus the stock market. So the stock market has trouble, economic problems, the same as the 70s and the 2000s, where you had uncertainty, and that uncertainty drove the miners higher. Um, So I remember I started doing this in 2004, and I missed the 2001 and 2004. I think that was a very strong period as well. But I started buying juniors in 2004. And so I've been accumulating for 20 years. But 2004 to 2011, there was a lot of strength in miners. Um, and I think that we're going to see that again. And I actually think it's going to be even stronger this time because I think this everything bubble, this debt bubble, is going to pop, and when it does finally pop, there's not going to be a lot of places to hide. And I think gold is going to be one of those places. And if gold does really well, silver will follow, the miners will follow. So that's kind of an introduction. So now I'm going to share my screen, and we're going to go over these stocks. Okay, so how many? I think there's 72, 71. So I have 71 producers. And these are the majors that I own. The M's are majors, EM is emerging majors, and MP is mid-tier producers. So I have about 10 majors. And you'll see the majors that I own, they're all five baggers except for Agnico Eagle. And the reason why I've held on to Agnico Eagle is because it pays a good dividend. And I have a big position in it. And so I've held on. I had a big, I didn't buy Agnico Eagle. I owned Kirkland Lake. And so they took out Kirkland Lake and I had a big position in Kirkland Lake. And so they bought it and I basically just held on to it because of the dividend. And the dividend is done really well. So every quarter I get this big check and I can roll it into stocks. Um, so B2 Gold, they're marginal. So I consider a major as three. I create my own definition as 3 billion market cap. And so my feeling is that I don't know if you've read my book or not. In my book, I basically say that if a company has $3 billion market cap, they are strong enough to kind of withstand nearly anything. And they have strong balance sheet. They can build mines. They're just in a very strong position. So I could have, and there's not that many majors. So I basically used that 3 billion as a kind of a cutoff, and then 2 billion for the emerging major. If it's two, I use that one. And then mid-tier is basically anything below that. And my mid-tier producers are, Wall Street would consider most of my mid-tiers as juniors or small producers. But I consider a mid-tier as anything that has 80,000 ounces of production. That's my cutoff for mid-tier. Okay, so Agnico, B2 Gold. So they're having some issues in Mali, and they're basically not getting value. So they're getting kind of beat up. Sentiment is really weak right now. So I think most of these stocks are trading about half their value. But if we look at B2, they have 300 million in cash and no debts. They have a strong balance sheet and they're trading it at a 4 multiple, 4.5. And their margin is about 1,000, almost $900. So you have a company that's trading with, it has a good balance sheet, strong margins, and yet is trading at a 4 multiple. I mean, Agnico Eagle is trading at 11, and they're probably one of the better gold producers out there. So it's kind of shocking. Even Agnico's cheap. But B2 Gold, the reason why they're trading at a 5 multiple is because their issues in Mali, their largest mine, but they're getting ready to build a mine in Canada, which, yeah, it's in Nunavut. So there could be some more cost overruns there. But on the whole, I have B2 on my top 25 list. I have it as an A minus. So I'm bullish. It pays a really high dividend as well, like 6%. And I'm okay with Mali because I don't think that the Mali government they can't nationalize all their mines. So they're just trying to squeeze these companies for as much as they can. Right now, they're squeezing Barrick. They just got done squeezing Resolute. Resolute had to give them a lot of money. And then B2 right now is, I think, okay with them. I think that they don't have any problems with them now. But so you have a combination. The one thing that's interesting about Mali is you have the combination of the government doing the shakedown, wanting more money, and then simultaneous to that, you also have rebel activity where the roads aren't safe. It's like negative. I'm very disappointed in West Africa. It's turned out to be a lot more risk than I anticipated. I own a lot of African mines, which you'll see. I think I'm going to probably get bit by some of these African investments. Hummingbird just basically went bankrupt, sold for 3 cents. That was a West African, company that very disappointing. So, okay, so the next one on the list is Hecla. Hecla, I think, is a kind of a go-to name. It's gonna participate when silver goes from 30 to 50. Hecla is going to participate because of the location of their mines in North America. Their mines are in the US and in Canada. And so that's where Wall Street's going to go. Hecla and Coeur, I consider them to basically be twins. They also have gold production as well. And I just think they're kind of must-own names. I mean, I have it really highly rated, 3.5, which basically means it's a likely five bagger. And the downside is 3.5 is basically as high as I go. And I have it as an A. And the reason why I have it rated so highly is because it's it's a go-to name, if you will. And I don't see them going away. I see them sticking around. And right now, $5 is not a bad entry point. I don't think you're going to get it below 4. So it's kind of bouncing on the floor here, I think. Fresnillo, um, it's kind of ridiculous. It's trading at $8. I have it on my top 25. The greens are top 25. The blues are top picks. If I think a company deserves to be on the top, it's called top 25, but that just it just my definition, I have like 38 stocks on the top 20. The number 25 is meaningless. If I think a company has a good quality risk reward, um, and five bagger upside, I put it on the top 25. So a blue means it kind of has some issues. It's close to being a really solid risk reward. And so Fresnillo, I have it, top 25 A minus. The reason why I have the A minus is because of Mexico, the location risk. And they have debt, 861, but they have a lot of cash. So they they maintain a lot of cash, and they're trading at a 7 multiple, which, as far as I'm concerned, getting it for half off. We look at their margins, you get a lot of leverage on silver. Um, so they do produce some gold. So about $6 margin on silver, which isn't bad for a silver producer, and almost 900 on gold. So we have their cost on silver. This is break even cost, $23 on silver, which isn't bad, and 17.50 on gold. So, Fresnillo doesn't have any problems, but they're getting kind of priced at that. I actually added to Fresnillo this week. I just felt that I'm very bullish on the stock. I I just the other thing I like about it is insider ownership. It's like one family owns like half of the thing, so no, they're not going to sell. I like that. And First Majestic, I increased their rating once they did the Gatos deal. The Gatos deal, it basically should take their ASIC below 20. So they should have about, $30 silver. They should have about $5 margins. So they're going to be generating a lot of free cash flow at 550. They're like Hecla, kind of bouncing near the bottom here. I don't see this stock going much below 450. So it's kind of bouncing on the bottom. Kinross, one of these majors that I, they've been, I think, executing pretty well. I have them as a possible five bagger. If I can own a major with five bagger upside, in fairly decent locations, count me in. So they have a lot of debt, 2.5 billion, but they also trading at a 5 multiple, pretty darn cheap. And if we look at their margins, they have $1,000 margins. I have them at 1550. So their costs are, they have lower cost than Barrick or Newmont. So I'm I'm a fan of Kinross at the moment. Endeavor Mining. Endeavor, this is West African. They're probably the best West African miner. It's on the top 25. I don't have them. I have them as a five bagger, so they're not super cheap, but they have low cost. They generate a lot of free cash flow, $4 billion market cap. So we have their 1.3 billion in debt, 400 million in cash. So balance sheet's okay. trading at a 3.3 multiple. I think this thing's probably going to, I wouldn't be surprised if it trades at a 12 to 15 multiple. So that's all multiple expansion when things turn positive. But if we look at their margins, $1,500, and their margins $1,100 an ounce. So, Endeavor, it's basically you don't have very many in West Africa. I can't even think of any underground mines. They're basically all, I think Fortuna might have one, but there might be a few, but most of them are, easy open pit mining. El Dorado, El Dorado, it's, I don't have it as an A minus because of some of the locations, because they have some mines in Turkey, but they have good margins. They're generating a lot of free cash flow. Um, I, you know, I just think these companies could do really well when this thing flips. So we can see their balance sheet. It's not terrible. 750 million in debt, but 677 in cash, which isn't bad. Trading at a 6 multiple. I think this thing's going to trade at a 12 or a 15. So you're getting it, multiple expansion on top of, $1,600 all in, break even cost, so $1,000 margins. Coeur, I mentioned Coeur and Hecla. They're kind of the go-to names. Coeur is actually very cheap. I have it as a 10 bagger upside, but that's at $4,000 gold. Pan American Silver, this is another kind of must own. I consider Hecla, Coeur, and Pan American to be the three kind of must own names. And the reason why is because of their brand. Wall Street's just going to buy those names. They're also going to buy Barrick and Newmont, of course, but Barrick and Newmont aren't going to have the leverage that a Pan American's going to have. Pan American has two large silver mines that they're trying to get into production. They're having a lot of trouble. One's in Guatemala. Maybe I heard that it's probably going to take them 3 years to get into production. They have another one in Argentina. Now Argentina is getting very positive, so that mine probably is going to go forward. And they're very large silver mines. SSR Mining, they just bought a mine from Newmont, Cripple Creek, in Colorado, which is going to help SSR. I mean, this company it got beat up when they had that problem in Turkey, and I think they're going to fix that problem in Turkey. And now, and nobody's giving them any value. They basically got beat up, and they just haven't come back yet. Trading at 1.4 billion. They were a lot higher than that. So I like the management team. They're a growth. They like to grow through acquisitions. So I, I like SSR. Perseus is West Africa. Perseus is, I think, the second best um, gold miner in West Africa after Endeavor Mining. They generate a lot of free cash flow. They have really solid margins. They like to grow through acquisitions. Their balance sheet, they do a really good job. 557 million cash, no debt, trading at a 4 multiple with margins, probably $1,000, maybe higher, $1,000 margins. Yeah, Perseus and Endeavor, I mean, they're just generating a lot of cash and they're not getting rewarded for with a 4 multiple. One of the reasons they have this 4 multiple is just because sentiment is just in the toilet. Nobody wants to own these things. Once it turns, these multiples are going to go 8, 12. And so you're going to really get that. IM Gold, they were a problem stock. And I thought they might even go bankrupt, but they've turned things around. I don't have them on the top 25 because they've had so many problems, and only a B. But they're really close to flipping to B plus and top 25. Really close. They got their mine in Canada up and running. They had a lot of cost overruns. So they don't have a clean balance sheet, but that mine is going to start to lower their costs. So they have $1 billion in debt, 224 million in cash. So they need to clean up their balance sheet. They're trading at a 5 multiple. So we're going to watch. Their costs are high at 1,800. They got $800 margins right now. So I'd like to see their costs come down a little bit and their balance sheet get cleaned up. But IM Gold's done a good job of fixing their problems, if you will. Resolute, they just fixed their problem in Mali. They basically paid off the government. I forget how much they gave them, like $200 million. But and I don't have Resolute as a top pick, and the downside is 2.5. Um, the higher the better. So 2.5 is basically marginal. 3 is good. 3.5 is very good. So you can see 2.5, B5. So I added this quality to give us some more color on the downside, because you can see we have these threes with different values. So it gives you a little second one. And then you also have the risk. Some is better than, it's basically no company has low risk, so I have it as some risk. I changed low to some. So Resolute, it's not a great company, but it's got a lot of leverage with the 4 upside, decent management team, a lot of gold. So if any mid-tier producer that I think has a lot of leverage, I kind of want to own them all. There's not very many names on here that I don't own. I've been very fortunate in that we've had this 5-year correction. So that this 5-year correction has allowed me to add a lot of mid tiers, because that's kind of where my focus is. Mid tier producers and developers are my focus, and with companies with a lot of leverage. Guanajuato Silver, they're very borderline. I mean, I have them on the top 25 and I have a 3 as a downside, but this is a company that could easily be blue and not in the top 25 with a 2.5, because they've diluted twice this year and their break even is about $30. And so they're having a lot of trouble, basically having enough cash flow. They produce about 4 million ounces of silver. So you would think they generate enough free cash flow to keep the business running. But they've had a hard time. You can see they're trading at 13 cents right now. So the leverage is kind of off the charts. But again, this is one they could get into trouble. I mean, if silver goes down to $26 and stays there for 6 months, they're gonna dilute us again. So dilution is always a problem with these small producers. I had them as a mid-tier producer because they produce 4 million ounces, but they're kind of borderline small producers. I mean, we have this market cap at 85 million, but Guanajuato is one. It has more risk than some of these other plays. West African, remember I mentioned that I have a lot of African plays. So, but I like their management team. They know how to build and operate mines. They're just a notch below Perseus, but they're in Perseus's class. I mean, it's almost $1 billion company. They probably have $1,000 margins, fairly decent balance sheet, 300 million in cash, trading at a 4 multiple. Their margins $1,000. So, and they have a lot of gold. So, I'm gambling on West Africa, as you can see. So we'll see if it pays off or if it bites me. Hochschild, I'm a big fan of Hochschild. It's kind of under the radar in my opinion. I have it as a 3.5 upside. In other words, I think it's a solid 5-bagger. Don't have it as an A minus. I have it as a B plus. So they have these 2 mines in Brazil, plus they have all their mines in Peru. They have a lot of gold. Balance sheet, not great, but not terrible either. 90 million in cash, 360, trading at a 6 multiple. Their margins about $750 gold, $4.50 silver. So not great margins, but good enough. The one thing I like about Hochschild is you get the Vulcan mine for free, and the Vulcan mine is an 8 million ounce low grade gold project in, I think, Chile. And Vulcan they used to ignore that. They used to not even mention it in their company presentation. They paid about $100 million for it about, I don't know, 10 years ago, and they just never talked about it. But it's in their back pocket, and they're not getting any value for it. As far as I'm concerned, the Vulcan mine is worth their market cap, 1.3 billion, if it gets into production. Because again, it's an 8 million ounce project, but they can't, they won't build it until you get to $3,000 gold, because it's probably going to have about a $2,000 all in, maybe 2,100. And so it's because it's low grade, and the capex is going to be high. But they're going to, as soon as gold takes off, they're going to build Vulcan. And so that's kind of in our back pocket. Vault is the first Aussie 8 stock. So I didn't mention the Mormons. So the Mormons are the pretty girls, the 8 prettiest silver miners. So we have Hecla is in the Mormon list. Now, you want to marry all 8. So you're going to have 8 wives. We got Fresnillo, First Majestic, Coeur, Pan American, and those are all in the Mormons list. And then we have any more Mormons I'll mention. There's 8, and then Vault is the first Aussie 8 stock. The Aussie 8s are the 8 mid-tier Aussie gold miners. They mine in Australia, and they all have market caps between 1 billion and 2 billion. So he's like 8 quality gold producers in a good location. So I call them the Aussie 8. And they all are basically trading at a discount right now, which is amazing because sentiment is so low. Because historically, a lot of times these Aussie stocks are too pricey. And I won't touch them with a 10-foot pole because they're too pricey. But these stocks, I couldn't believe it. None of them are pricey right now. Like none of them have a multiple above 10. Most of them, the average multiple is around 6, I think, maybe 7. So Vault, that used to be Red 5, they changed their name. So this is kind of a typical, no debt. None of them have a bad balance sheet on the Aussie 8. 285 million in cash, trading at a 4 multiple. I mean, if you could buy the location alone should have a higher multiple than this, in my opinion. You wait. If sentiment takes off and sentiment improves, you watch and see what these multiples do. I remember Rick Rule saying that he thought the multiple would go to 30 if things get absolutely bonkers. So, and we're seeing some companies today that are already above 20. So a 30 multiple isn't insane, and these are all trading like at 4. But you're only going to get a 30 multiple again for really quality names and good locations. But they have nearly an $850 margin, 1750. So, and they're only trading at 4 multiple. Okay, the next one is Step Gold. They're in Mongolia. If you don't mind Mongolia, I think Step is an interesting name. You're paying $100 million for a company that's probably going to be a 150,000 ounce producer. They just bought a company called Baru, I believe, Baru Gold. So they have 2 mines basically in operation, and they both have good exploration potential. But Baru they only has like a 7-year mine life, so it needs to expand. But on the whole, I have it has a lot of leverage. I have it as a B minus because low resources. They don't have a long life mine. You want at least 10 years. So Baru doesn't have a 10-year mine life. But I think they can expand to that. And then you have the Mongolia, if you don't mind Mongolia. But I think Step's interesting. K92 has one of the better properties in the world. They're going to be drilling that property, and it's high grade. They're going to be drilling it for another 10 years. It's just going to just keep getting bigger and bigger and bigger. I've been waiting for them to get taken out. I have insider ownership under 20%. When it says NA, that usually means it's under 20. So they're kind of vulnerable for getting acquired, which I don't like. I was hoping that they would merge with maybe an Aussie 8 company because they have the kind of the same size market cap. Kind of a merger of equals with one of the Aussie 8s would be beautiful. So I just don't want them to be getting taken out by a major. If they get taken out by a major that I don't like, then I'll sell it. But it's really good. Of They're in PNG, Papua New Guinea, and they haven't had any problems. The government that's not a risk-free country, but they've never had any issues. Hopefully it'll stay that way. Santa Barbara, they sold their West African, excuse me, Western Australian mines to Genesis, and so now they're in. I think they're also in Papua New Guinea, and they're expanding there, and it's a pretty good mine, and they're also mining in Canada. So Santa Barbara, they're not, high quality, if you will, but they're cheap. They have a market cap 165 million. I have, a lot of leverage for, but it's not a top pick, and I only have it as a B minus. But and they have high cost. So it's really one for if you don't mind the risk. If you want to chase some alpha, I think it's interesting at this valuation. Mag Silver. I've never really been a fan of Mag because they don't tell you what their plans are, and they don't have control of their mine. They get 40% of the production. It's one of the better mines in the world, but they don't have any control over it. Fresnillo does. Fresnillo decides how much exploration they're going to do on it. And so we don't know if it's growing in Juanicipio. And so it's one of the better mines as far as grade goes and cost go. But currently Fresnillo is not spending a lot of money on exploration. So there's no growth. There's no pipeline for mag. But I hold it because I'm just waiting because you get that leverage um, of higher silver prices for mag. So I'm just kind of holding it, waiting to see what they do. I have it rated as a five up bagger, a five bagger with a three, but I don't have it as the top pick. I think they're going to get multiple expansion. So they're probably, let's see what their multiple. So they're trading at a 10 multiple, where I said, here's one, Silvercrest is a 15 multiple. So here, I is at a 35. So we're already seeing some of these high multiples on some of these silver miners because the silver miners are cheap. So about a 10 multiple. I don't think it'll go to a 20, but it probably could go to 15. They have a good balance sheet, 100 million in cash, no debt, but they don't have a pipeline. So I'm not a real big fan of MAG. Silvercrest, they just got taken out by Coeur. I expect that deal to close. That's going to really improve Coeur quite a bit. Santa Cruz has a polymetallic mine, but if you just count the silver, only the silver, they produce about 5 million ounces of silver alone, and everything else you can use as offsets. And if you look at it like that, it has a lot of leverage. I have it as a 10 bagger, upside potential, but it's not a top pick. But I think I kind of like the risk reward, but they have a terrible balance sheet right now. They have a lot of debt, so they need to clean up. They have 80 million in debt. They got to clean that up. Once they clean up, and they also have high costs right now. So Santa Cruz is a high risk company. Silvercorp, uh, you know, I was a little nervous about Silvercorp because of Taiwan, because I think that China is probably going to invade Taiwan at some point. Now, it's a Canadian company. Is Canada, going to, get impacted by that war? Maybe, but Silvercorp they just acquired a company in Ecuador that has two projects that are both pretty darn big. The first one is a copper gold project, which they're building right now. And then the second one is a large low grade gold project. Those two projects alone are probably worth their market cap, which is kind of amazing because the silver mines in China are worth a lot. So you're getting a really good number for Silvercorp for what they have. So I think I'm a little under allocated on it. Um, because I'm I like it. Oh, I was going to talk about that. How much do you allocate? So I like to allocate a 1/4% um, minimum, and then 0.5% for producers that I really like. For instance, like Silvercorp should be 0.5%. It is 0.5%. And then producers that I absolutely love, I want around somewhere between 0.5 and 1%. So I don't have 1% on Silvercorp. I have more than a half. So that's how I allocate. I don't like to go above 1%. Um, but they tend to get above 1% if there's mergers, like you start it with 1% and then they acquire somebody else. But my cost basis, I consider it my starting point. So when I go and buy a company, it's usually quarter, a half, or a one. Those are my three allocations. I want to have at least a 1/4% of of a producer, like all these names. If I don't, then I'll add. I might go a little bit below a 1/4%, but not very much, because you don't want to be under allocated and then the company rips and goes higher. So you got to be careful. One thing, I don't want to be over allocated. I don't want to be under allocated. It's kind of the sweet spot. Sweet spot for me for a producer is about a 0.5%. I'm very comfortable with that. Although some names, if I really like them, if I'm like I said, Silvercorp, I'm a little over a half, and I'm like that. Fresnillo is another one. I was underweight, and I took it a little bit above a 0.5%. Okay, so I think that's enough on Silvercorp. New Gold. I actually sold New Gold when they were having trouble, and then I bought it back because they've fixed their problems and their costs are actually going down. So I have New Gold. I don't have it as a top pick, but they're very close to. I don't have it as top 25. I have it as a top pick, but they are very close to going on the top 25. They need to clean up their balance sheet a little bit. They got 500 million in debt and 184 in cash. Well, if they flip the balance sheet. They're trading at a 6 multiple, so they're still cheap, and their costs are going down. So their margins right now is about $1,000, which is really good, and they're going down. So um, I basically these costs. So here we have 1,600. That means their ASIC is about 1,300. That is a really big improvement for New Gold. They've really had a turnaround there. So that's why I got back into it. I also like New Gold's management team, and I think that New Gold is going to acquire somebody. I think they're going to grow. Historically, they have been a growth story, but they lost their Blackwater project to Artemis. Um, and now I think they're going to try to grow. I think they're going to do an acquisition. Orezone, another West African miner. I like this one a lot. I just hope it's in Burkina Faso, I believe. Um, they have some really good exploration potential. I was looking um, at Beaver Creek. They were showing us the drill holes. They basically had never drilled this thing below 200 meters, and it was ending in mineralization. And they have I forget how many kilometers that they can drill this thing deeper. Orezone's going to add a lot. It's a really good mine. It's going to get bigger, and they're not getting any love. They're trading at 176 million. Um, and insiders 25%. I hope that's enough to fend it off. But they have not a great balance sheet, 62 million in debt, but they're paying off their debt fairly quickly. But they're trading at a 1.5 multiple. 1.5. It's kind of crazy. And their margins are $1,000. So gold can stay above $2,500 this year. They're going to pay off their debt. And again, it's a growth story because they have a lot of gold and they're finding more gold. So if you don't mind West Africa, I think Orezone is a really good play. Orla Mining, I'm a big fan of Orla. I've always thought that Orla is going to be a growth story. I like their management team, good properties. I think it's a growth story. I think they're going to find a way to grow. They just did an acquisition, didn't surprise me at all. Um, Adding production, insider ownership 50%. I really like that. Let's see their balance sheet, 90 million in cash, no debt. Um, Trading at a 10 multiple. You can see, that's kind of pretty high for most of these America or most of these companies, other than so we have Gold Road at 10, but 10 you don't see. I mean, Agnico Eagle was at 10, but Orla, their costs are low. So they have a margin of 1,500, so 1,150. So their ASIC is about $850. It's one of the cheapest. When Dundee and Orla are two of the lower cost producers, $1,500 margins. So that's big. I'm a fan of Orla. Now again, we don't know which companies are going to be successful and which ones aren't. All we're trying to do, that's why I own so many, is hoping that 80% of them, the 80-20 rule, do well and we go to $4,000 gold. And then when they merge, if companies merge, you kind of want to own them both, kind of thing, because you don't know. But there's going to be a lot of consolidation. Okay, Gold Road is one of the Aussie eights. I think 5 years ago, I probably owned like two of the Aussie eights. Now I own all of them. So Gold Road is one of the ones I recently picked up because it got cheap enough. And now it's at a 10 multiple, that's about as high as they go. But the one thing I like about these Aussie companies is they have really good exploration potential at their properties. It's not as if, they have a mine and now they got to go find another mine. Just about all of these Aussie eights, all they have to do is just drill more on their property. That's like Gold Road is kind of in that situation. Bellevue is another one, just really good exploration potential on their property. I'm not really worried about life mine. So Gold Road, 54 million in cash. So they don't have great balance sheet, trading at a 10 multiple. That's what I kind of expect for the Aussie miners, but they have $1,000 margin. But one of the reasons why it's trading at that 10 multiple is their exploration potential. Also, good management team. Pantoro. So my Aussie eights have market caps from 1 to 2 billion. Pantoro is only at 300 million, but Pantoro is, they're close to being Aussie eight. I think this company is going to double fairly quickly. 100,000 ounce producer, a lot of exploration potential. I'm, this is one of the ones I picked up recently. It just, it got too. They just went into production last year and they ramped up really well. 11 million they have a good balance sheet, only 12 million in debt, 70 million in cash, trading at a 4 multiple, and their margin's $1,000. So Pantero looks, they look pretty good. Rainlius is on the Aussie 8. Again, market cap between 1 billion and 2 billion. So we look at their balance sheet, 300 million in cash, no debt, trading at a 4 multiple, which is again ridiculous for an Aussie stock, with a $1,200 margin. So Rainlius is doing really well. Regis, another Aussie 8, they had problems getting permits recently, and they might not get that permit back, which kind of slowed them down a little bit. I think their share price went the wrong direction after when they had that problem with permits. But I like Regis a lot. I think Regis is a kind of a quality name. They have 200 million in debt, and 250 million in cash. So the balance sheet isn't terrible. Trading at a 5.5 multiple, which is low for them. And their margins aren't great because their costs are high, $600 margin. So they're not doing as well as some of these other Aussie eights. Costs are a little high, and they had that permit issue. But Regis for me is a quality name. Adriatic. So Adriatic, I was worried about Adriatic. They're in Eastern Europe. They're ramping up a very large polymetallic, silver, zinc mine. And so far, so good on the ramp up from what we're hearing. And hopefully they won't run into trouble. They haven't had any cost overruns. It's up and running. They haven't really had to, and the share price is doing fairly well. Their ASIC is supposed to be under $10, which would be amazing if they hit it. So if their ASIC's under 10, you're talking about $15 margin. They could be generating a lot of free cash flow. So Adriatic, I mean, that's a stock could make the Mormon list. I basically stick them on the Mormon list, maybe in Q1 or Q2 of next year. So they're so far so good on Adriatic. Greatland Gold, this was a stock that I really was never a big fan of, but on Twitter, some guy just kept sending me over and over again. He would send me these tweets, telling me, he loved Greatland Gold. So finally, I looked at it. Finally, he kind of talked. I don't know. I decided to get in. Their Haveron project at the time they only owned, I think, 50% of Haveron, but it's a really good property. But it was early. It was kind of an early stage development play. So I wasn't. But now they acquired it. They acquired Haveron and the Telfer mine, which they're going to use for Haveron. They just closed like last month, and so it's now Greatland is a mid-tier producer, although Telfer only has like a 15-month mine life. So there's going to be a gap, probably a 2-year gap, while they build Haveron. I'm thinking it's probably going to take them 2 years, but they have 15 months to kind of get it construction ready or get it. I don't know. Maybe I'll get lucky and the gap will only be a year, but we'll see. We haven't gotten guidance on that yet. But Greatland owns Haveron, which is one of the better projects, one of the better properties, got a lot of exploration potential. So I'm glad I got into it. West Gold is another Aussie 8. And West Gold, I have them as an A, but I don't have them as a 4. So, but I like it. 3.5A. I mean, just solid A. That means I must like this thing a lot. I like the CEO. They did a merger of equals with Karora. I was a fan of Karora. I owned it. The CEO told me that they're going to continue with a cash focus, basically $100 million in cash, and try to hold that level. And if they ever have to add any debt, they're going to pay it off as soon as they can. Trading at a 5 multiple. The margins, $1,000 margin. So basically, they're going to be cash focused with good margins and growth story. And so I like I said, I like the CEO. I like their focus. There's not a lot of companies that are cash focused. And when they flat tell me that we are cash focused, they figured it out because in my opinion, if a company has 300 million or more cash on their balance sheet, that gives them a lot of flexibility. For instance, if they can any cash that they accumulate in a year from free cash flow, they can buy back their shares or they can pay out their dividend, and they can just maintain their cash balance, and that's going to push their multiple up, and then they can borrow against it. Any bank is like, okay, we have 300 million, we want to borrow 100 million, no problem, here you go, here's your 100 million. So they can borrow money anytime they want, and they can pay it off. So I like the cash focus. Dundee. So Dundee, big fan, Eastern Europe. They're not really getting, they're not super cheap. I mean, I have a 5-bagger. I have them as a B plus and not as an A minus because of Eastern Europe, where I've had some bad luck. But they have really good margins and a really good balance sheet. This is my cash focused scenario here. Now it's kind of mind blowing that they have 650 million in cash and they have a multiple of 5. I think their multiple is going to jump to 15 when the sentiment improves. If they keep their cash at this level and then start buying back shares and start paying out dividends, because I think they're like a 500,000 ounce producer. So they're going to generate a lot of free cash flow. And what are they going to do with all that cash? So they start buying back shares, they start paying out dividends. They have a $1,300 margin, which is, outstanding. Um, so they're only producing 260,000 ounces. So not 500, but they are growing. But Dundee it's kind of under the radar in my opinion. It's like trading at a 5 multiple is kind of ridiculous. Allied Gold, they're a producer in Africa and they're all over. They're in Eastern Africa, Central Africa, Western Africa. A lot of people aren't going to touch this thing because they're not going to like the location risk and they're going to ignore it. But Allied is they have a lot of gold, a lot of properties. It's kind of an under the radar kind of company. It's like, who's Allied? A lot of people haven't even heard that name. But Allied, they have, balance sheet's pretty good, 100 million in cash, 55 in debt, trading at a 2 multiple, a 2 because of location risk. And they're currently trading 400,000 ounces of gold with $1,900 margin. So they're 400,000 ounce producer and they're valued, their market cap, 700. So this thing could easily jump to 3 billion. So you're basically, the leverage is kind of off the charts. That's why it's on the top 25 with a 4. America's Gold and Silver. This is one you have to kind of hold your nose because the management team has consistently disappointed us. And usually when that happens, investors are going to stay away. So you're not going to get a big multiple expansion. And they're probably going to have problems. They're going to probably going to dilute you into the ground. But I liked their Galena property, the one that they did the JV with Eric Sprott on. Galena is pretty solid. So they have a terrible balance sheet, 42 million in debt, 2 million in cash, but they're trading at a 10 multiple. So people have expectations that they're going to turn things around. Uh, Mainly a silver producer, so their margins are only $5. They are producing 2 million ounces a year in silver. They have a gold mine on care and maintenance in Nevada, and they have another silver polymetallic mine in Mexico, and then they have the Galena mine in Idaho. This is one of those ones where if you want to bet on the leverage, but it is a kind of a hold your nose stock. Andean. So Andean, they bought that Silver Queen mine in California, which has kind of bit them a little bit. The costs are higher than they expected. They're having to put more CapEx in than they thought they were going to. So their valuation is kind of, it's kind of got hit a little bit. They're not getting the value. I think they're trading like a 3 multiple. That's so they have a decent balance sheet, 92 million in cash, trading at a 3 multiple. So their share price got hit a little bit because they're having trouble. But it's basically gold and silver. So their gold margins, so their gold price is 21.50. So their costs are up, and silver 25. So they don't have really great margins. 450 on silver, 450 on gold. But they are generating some free cash flow. The silver production is only 60,000 ounces and 5 million ounces of silver. I, you know, I don't have it on my top 25, but I do have it as a top pick because they are generating cash. They do have leverage to silver. They have high insider ownership, so no one's going to steal them. They have a good balance sheet. On the whole, I think the leverage is there. I think it's kind of worth the squeeze. Artemis Gold, they picked up the Blackwater project from New Gold, and it's in production. I think this is a growth story. I think they're going to take that free cash flow, which is going to be significant, and they're going to grow the company. So if we look at 342 in depth, they're going to pay that off fairly quickly. They're trading at a 4 multiple, which I think is kind of ridiculous. And then they have, $1,000 margin, $1,100 margin. I think Artemis is there's a lot of these companies. It's really interesting. There's a lot of these companies that are all competing, for acquisitions, for growing, because they want to grow the company. It's like, how are they going who are they going to buy, kind of thing? Buy each other, I suppose. I think we might see some merger of equals. I don't know, but we are going to see, because they're all going to be generating a lot of cash and they're going to want to grow the company. So we're going to see some M&A deals. Aura Minerals. Aura is in South America. They have a lot of projects, like 4 operating mines. It's kind of like a Fresnillo, Buenaventura kind of field, where they have the Spanish, you know, company presentation. Do you want to see it in Spanish? Do you want to see it in English? So I think a lot of investors probably get turned off by that, but I think it's a well-run company. I don't have it as on the top 25, but I have it as a top pick, and I don't have it as a 10 bagger, but I have it as a pretty kind of a solid 5. Really high insider ownership, so no one's going to steal it. Balance sheet, not great, but not terrible. 200 million cash, 340, trading at a 3 multiple. So it definitely does have some leverage. $1,000 margins. So about a 1,350 ASIC, mining 300,000 ounces a year, and they're growing. So I think Aura, it's a pretty good name. I don't like it as much as, say, I like a Hochschild or a Fresnillo, but it's kind of right below them. It's not a definitely not a bad name. Avino, I really like Avino a lot. I think it has probably, some of the most upside of any silver miner. The reason why is because they have like 350 million ounces of silver equivalent, and they're just going to keep adding 1 million ounces every year for like the next 5 years. So they're currently about 2 million ounce producer, maybe 2.5, and they're just going to grow to like 7. And they're just not getting that value. So it's a long-term play. I do think they're going to get taken out if they don't do a merger of equals. I hope they do a merger of equals. A merger with Go Gold would be really good. They need to do a merger or even Endeavor Silver. They need to do a merger of equals to protect themselves, because they're very vulnerable. I think right now, if Hecla and Coeur wanted to take them out, it'd be easy peasy. They would just go in there, do a hostile takeover, and say, okay, we're going to give you a 30% premium. And I guarantee you, 80% of their shares are owned by retail. Retail will basically say yes, because most of those retail investors are going to own Coeur Hecla, and they're going to say yes. And all they need is 50%, and boom. So any hostile takeover attempt by a big name is gonna go through, even if the board says no, 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 it's still going to go through. So I think Vino, I think they're going to get taken out, but I'm bullish. A lot of leverage. I mean, that is a stock that you get to $40 silver, and this thing probably is going to easily go to 300 million. And then you go to $45 silver and it goes to 500 million. It's just going to start, it's just going to get, it's going to rip higher. Aya, um, Isaac, I really like their properties. Zagounder just expanded to 8 million ounces a year production. They have 50% ownership, and their Boumadine project is bigger than Zagounder. So we're looking at a 16 to 20 million ounce silver equivalent producer. Now, Zagounder is all silver, which is rare. Boumadine is silver, gold, and I think copper and maybe some zinc. But Aya, and they just keep finding more. Boumadine just keeps getting bigger, and Zagounder is getting bigger too. So it's in Morocco. They haven't had any problems in Morocco. I think on the whole, I'm not a pro. I don't have a problem. I have the risk is moderate because it's in moderate there. But if we look at their balance sheet, it's 100 million in cash, 95. I like their management team a lot. They're multiple trading at a 35, that's the reason, because they're just ramping up right now. They're ramping up that 8 million ounces they're putting online. That's the reason why it's at 35. but it's gonna their free cash flow is gonna rip higher next quarter, and they have about $11 margins, so cost at 19, so they're going to be generating a lot of free cash flow. So this 35 is misleading. Bellevue is on the Aussie 8. I think Bellevue is probably going to get taken out. I really like their exploration potential of Bellevue is just off the charts. It's unbelievable how many drill targets they have. Big fan of the company, but they don't have enough insiders. See, we have insiders in A. They don't have enough insiders, so I think Bellevue is a sitting target. Um, I hope they do a merger of equals with one of these other Aussie 8s. But I like their team. I like their management. I like their properties. I like their location. Insiders is a big problem for them. I don't have them on the top 25, and I'm trying to think of why. I don't think they have a debt problem. They don't. They don't have a cost problem. Why aren't they there, Don? Cash debt is about the same. Multiple of a 5. Um, huh. Yeah, so there was another one that I thought that I was going to move, but I think Bellevue, I think it's not there because of insiders. Um, yeah. So I think it was another Aussie 8 stock that I wanted to put on the top 25. Okay, Caliber. Caliber, they acquired the Marathon project. Um, I think it was Marathon Gold. Yeah, they acquired them, and they're finding more gold on that property. And so Caliber looks really, really solid. And then their properties down in Nicaragua, which adds some risk. Nicaragua does add some risk, but they're really good properties, good exploration. They also have a project in Nevada that's they're adding gold. I think Caliber is, insider ownership only 20%. That bothers me. Balance sheet's fine, no debt, 62 million in cash, trading at a 7 multiple. They have good margins, I believe. 750, not super low cost. 1850, so about 1500, 14, yeah, about $1,500 ASIC. So not super low cost, but Marathon, that property, I'm I'm a fan of Caliber. Let's put it that way. I don't think they're going to have any problems in Nicaragua, fingers crossed, and I think hopefully they're going to grow. Capricorn is another Aussie 8. I've always been a fan. They have really good margins, generate a lot of free cash flow. They usually, and so they're trading at a 10 multiple. So they have 100 million in cash, 31 million in debt. So they have a decent balance sheet, and they have good margins. So they have about 859, say $900 ASIC, so $1,300 margins. So Capricorn's generating a lot of free cash flow, and they're going to continue to generate a lot of free cash flow. It's a long life mine, so yeah, Capricorn, solid Aussie 8. Genesis, another Aussie 8. I think they're the final Aussie 8. So they have more gold than any of the other Aussie 8s. They have like 18 million ounces of gold, so it's kind of a growth story. And so if we look at their balance sheet, no debt, 100 million in cash, trading at a 12 multiple. The reason why I'm trading at a 12 multiple because all the gold on their balance, all the gold they have. So it's a growth story. So currently trading about 200,000 ounces, but they're going to double that fairly quickly. 750 margins. Genesis, they're kind of an up and coming company, but I'm glad I own it. I think it's a growth story. Centera, they had projects in the Russian satellite countries. And so I never liked it. I always thought it was a high risk stock. Well, they got rid of all of those projects. The only ones they kept was Turkey and Canada. And so if you don't mind Turkey, I think Centera is a really good mid-tier producer. and I have them on the top 25. I only have them as a five bagger. But it's one of those ones is trading at a low multiple. So it's trading at a three multiple. They have 600 million in cash and no debt. It's just like Dundee, a lot of cash and a low multiple. I mean, it's just ridiculous. A three multiple, and just because of Turkey exposure. And if we look at their margins, they have $1,000 margin and they're producing almost 400,000 ounces a year. So yeah, it's like I like it a lot. Catalyst metals. This is similar to Pantero. They're producing, um, oh, I don't know if they're at 100,000. We'll see. But market cap about 400 million. Don't have it on the top 25, but I have it as a top pick. I don't have it as a B plus, but it's because their resources are not great. But their balance sheet isn't great. They only have 10 million in cash. They're trading at a five multiples. You're getting a lot of leverage, and they're producing 120,000 ounces a year. So, and their margin's about 650. So not great. I mean, we'd like to have 900 or more. Let's say 800 or more on the margins, but 120,000 ounce producer, and you're only paying in Australia, Western Australia, you're only paying 400 million. So those are the kind of things I look for. Anything that has, kind of solid five bagger potential, and then you never know how they're going to grow. Fortuna Mining, you have the Western Australia risk, because most of their growth is coming out of West Africa, and so and then they're basically going to stop producing silver in Mexico this year. That was very disappointing to me. But I like their management team. As long as you can handle the risk with West Africa, I think it's a pretty solid play. So they have 140 million in debt, 130 million in cash, a multiple of trading at a four multiple. So you're basically getting a discount. They're 450, excuse me, 400,000 ounce producer plus silver. Um, so they're generating a lot of free cash flow. Margins, $800 on gold, which is good. Silver, not that great, $3.50, but it's basically a gold miner now. So Fortuna, I think Fortuna is pretty solid as long as you don't mind that West African exposure. Gatos, that's going to close with, hopefully, going to close with First Majestic. Endeavor Silver, I'm a big fan of Endeavor Silver. So Endeavor Silver, the Terranera project, EXK. So let's see when the Terranera. Okay, we got Pitarrilla. Where's Terranera coming online? I think Terranera comes online this year. No, 24. It says 2024. So Terranera is ramping up right now. Should just about be done. They had a problem with Guanacevi, but this got fixed. They said today they're back to 100% production. And then Pitarrilla, they announced that they did a capital raise, which people didn't like, but now they're fully funded for Pitarrilla, and they're going to go after, that's their next mine. So look at this thing, look at its rip this year from 400 million to a billion, but it's still cheap. If we come down here at the bottom, we look, so they're trading it in the multiples of 53. Wow. I think that's because the Guanacevi problem. Yeah, the Guanacevi problem. So this is going to shrink down. But that's also, they're expecting Terranera to come online. But I have them currently as 5.5 million. I think this is silver equivalent, rising all the way to 16. So if they get all the way to 16, this thing has 10 bagger potential. So I'm a very big fan of Endeavor Silver. I think I'm worried a little bit about insider ownership. Um, they're kind of in play, if you will. Be interesting. I think Hecla wants to get into Mexico. So Hecla acquiring Endeavor makes sense to me. I think that would be a very smart move. Um, I think First Majestic acquiring them would be a smart move for them as well. Equinox. So Equinox, they just got their big mine in Canada up and running, which is going to lower their cost. They have Equinox has been a bit of a mess, but they have a lot of leverage. I'm here. I don't have a top pick, but I have an upside as a 10 bagger for a major. I mean, this thing has a $2 billion market cap, and I have them as a potential major. I like their insiders. Ross Beatty runs it. They have a terrible balance sheet, $1 billion in debt with high cost, trading at a 5 multiple. So I think this thing could get to 15, um, quite possibly, but they got to fix their balance sheet. They have high cost. They have $600 margins, so not super high, $2,000. So their ASIC's about 1,700. I think it's going to come down. Um, I think they're going to be a million ounce producer. Right now they're at 640,000 ounces, but I think this is going to be a million ounce producing company. Um, it's not solid as a rock, there's definitely some risk there, but on the whole, um, I, I, I like the leverage. Galliano, they're in West Africa. This is a kind of a high risk. Remember, I said West Africa is probably going to bite me. Um, This is one that I'm not super excited about. They don't have a good pipeline. It's kind of a single property thing. But I could see myself selling this stock once gold gets to like 3,000. That'd be one of the first stocks I sell. G Mining. I'm a big fan of G Mining. I think they have a good management team. I think it's a growth story. They know how to build mines. They built their first mine in Brazil. Now they acquired another mine. The capex is kind of off the charts, like $1 billion capex for this project they bought in northern South America. I can't think of the country. It's not Ghana. I think it's next door to Ghana. No, maybe it is Ghana. Guyana, excuse me. Maybe it is Guyana. It's either Guyana, it's right next door to Guyana. But it's a big property. It's a really solid project, but the capex is kind of through the roof. But on the whole, I like G Mining because I think it's a growth story. I like aggressive management teams that are growth stories. Silver X Mining. This is like Guanajuato. They need higher silver prices. They're probably going to dilute us. They've diluted us, I think, twice last year. We can expect them to dilute us again. We need silver to get above 30, so these Silver X and Guanajuato can make some money. Um, but it's got a ton of of upside potential. But we need to get to $35 silver for that potential to kick in. Otherwise, we're going to get bid on dilution. Alkane. Uh, Alkane is a kind of a high risk. It's not a slam dunk. I have it as a top pick, but I don't, not a top 25. Um, they're currently producing gold, but they have a large gold copper project in Australia. So they're in Australia. I like the leverage, so I went for it. Talisker, another high risk company. So now we're getting into, okay, these are emerging mid tiers. So these have more risk. Talisker, British Columbia, they've been having trouble. It's a turnaround story. Usually turnaround stories bite me, but I went for it because they got so cheap. I mean, it's trading at $27 million, and this thing could be a 100,000 ounce producer in Canada. So it's one of those ones if you don't mind the risk. Heliostar, though, I'm a big fan of this one. I think they're going to be a mid tier fairly quickly. I think they're at 40,000 ounces right now. I think that it's going to be a 200,000 ounce producer. If you guys remember, coming out of Beaver Creek, Heliostar was my favorite stock coming out of Beaver Creek this year, back in September. Um, I'm that one you can take a look at, but I think it's going to be a 200,000 ounce producer. Currently a market cap of 125. I-80. This is a long term play. It's really a 5 year. It's I just like the properties. I like the locations. Basically, I think it's all in Nevada, but it's not going to pay off for a while. Luca Mining. Luca, this is another high risk play down in Mexico. I don't know if they're going to grow. I like companies with pipelines, but it got super cheap. Like it's at 94, but I think I bought it like half this. And so it just got too cheap for me to pass up. It's got some nice leverage of the 4. A Cisco development, I've always liked the project that they're building. It's going to take them 2 years to build it. So it's kind of a, we're going to have to wait to get paid. I think we're getting their Utah project. I want to say Tinka, but that's not right. Start with a T. Tentic. The one in Utah. Well, basically, we're getting that for free. So I'm hoping they find some exploration play. But I'm owning it because I like the project in Canada. It's high grade underground pit. Just always liked the project. Integra bought Argonaut's gold property in Nevada, so they're now a producer, and I think they're going to ramp up and be in a mid tier fairly soon. So Integra, they already had a big development project, so now it basically they're a producer and he gives them a path to production on the second one. Lion One, I like Lion One's exploration potential in Fiji, but I have it on my top 25, and the reason why it's there is because I think that production is just going to ramp up, and you're getting a great price at 65 million, I think. Go Gold. I think Go Gold is one of the better. This is more of a development play, but it's on here because they are a producer. I have an emerging major. They are a producer of their tailings project, but it's really a development play. Serato, these are small producers, so these have kind of a high risk, but they are fours, and so they do have leverage. Serato, 28 million. They're basically a 50,000 ounce producer down in Argentina. If they can extend the mine life to 10 years, I think it could be a four bagger. Impact, I don't like small producers, but I have a few on here. Serato, hoping they can grow out of that. Impact, I've I've watched Impact over the year. Impact, I like their property. I think they can maintain 1 million ounce of production and they can expand it to two. If they can expand it to two, it could be a 10 bagger. Bear Creek is really a development story with their Karani project, which I like a lot. And then Kuya, high risk. I don't know. This one might disappoint us. You can notice none of these are top picks. Kuya, small producer in Peru, I believe. And then they have an exploration development play. I think it's exploration in Canada. Not a huge fan. And then we got Ascot. Um, they are near-term producer. I have them as C here because they've tried to ramp this thing up. This is the three strikes they're out. This is a company that could easily go bankrupt if their ramp up fails. So this is a high risk. But if it works, if the ramp up works, they could be off in the races. And then Bunker Hill, this is the last one and we're done. Bunker Hill, I like the exploration play. It's in Idaho. I think the upside on this company is huge, but they're having trouble with the ramp up. They just 50% cost overruns. They basically paid $100 million to produce 1 million ounces of silver a year. I mean, it was just kind of the overruns were just kind of ridiculous. But hopefully they get into production. It's supposed to be Q2 this year. And once they get into production, they're going to start drilling. And, Bunker Hill, it's a little bit better than America's Gold and Silver, but it's high risk. Okay, guys, that was a long one. Thanks for hanging in there. I'll probably do one more of these for my development play. So I'll wait and get some feedback from you guys. All right. Let's